Peter here from Nova Home Loans. Let's talk about my favorite loan type. And that's definitely going to have to be a conventional. The conventional mortgage is definitely just the most versatile loan product out there. I really believe there's no loan product that has so many different options for you to buy a house, whether it's something you're going to live in full time, be a vacation house, an investment property. There are so many different ways to do a conventional loan, and I'm going to go over a little bit about that with you right now. So some of the things I like. Number one, you can do virtually every property type, right? Single family residence, townhouses, mobile homes. I think it's interesting how people they don't realize that you could do a mobile home with a mortgage. Condos, vacant land. There's a lot of options with a conventional. And I like them because in a way they're some of the least expensive. And here's why. Conventional loans don't have funding fees like you find with an FHA or a VA or USDA. Any of those government loans, you are paying for the privilege of, having a loan that maybe allows for a higher debt to income ratio or little to no money down. It's built into the loan, and I'll talk about that in another video, but there's nothing tacked on to your loan amount that you're going to find with most of the government programs, right? And another thing that a lot of buyers don't realize is that you can buy a home with a conventional loan, and if you're a first-time home buyer, you can get it for 3% down. 3. That's less than FHA. I don't know why more people don't realize that. 3% down, conventional. I've done condos that way. I've done mobile homes that way, townhouses, all that. Very efficient and inexpensive way to get into a new home. Now, conventional loans do have mortgage insurance unless you put 20% down. Okay. Now, let's say you buy a house, you put 10% down. Mortgage insurance is pretty small at that point monthly. There is also a way to do a one-time MI where you pay a lump sum upfront at closing, and then you have no mortgage insurance, which is cool. But let's say you put a minimum down payment and you have PMI. When the value reaches 78%, the mortgage insurance falls away. That doesn't happen with an FHA loan. That MI stays forever, so you'd have to refi to get that out of there. Another unique thing with a conventional is that conventional allows for an appraisal waiver. An appraisal waiver is an opportunity where, let's say, we do an application together and you have a particular address that you are wanting to buy. I can run your file with DU or LPA. DU is desktop underwriter. LPA is loan product advisor. That's Fannie Mae, Freddie Mac. That's their automated underwriting system. It's an algorithm, okay? And there's no guarantee that you'll get an appraisal waiver, but what I know has worked in the past many times is if you have great credit, you have debt to income ratio, in the 43 or lower percent, and 20% down at a minimum. If the algorithm sees that house is in a stable market, get you an appraisal waiver on that place. Now, it varies from house to house. The house next door might not get it. So there's no way to know which will qualify and which will not qualify unless, like I said, we run your file, run DU, run LP, and see if the house qualifies. And if that's the case, if I have an appraisal waiver and I have all your documents and bank statements and all that and your income figured out, I can close the thing in like 10 days. Like literally, they're super fast closing, faster than hey, stop it. Got my guy here hanging out. That's Bashar. Hi. He's such a sweetheart. He's a year and a half. Oh, you're year and a half now, aren't you? Look at that guy. Appraisal waiver, that's what I was talking about. So they're cool. I've been able to win offers with appraisal waivers where, my agent provided me the address before they're going to make an offer. I run it through the system. I say, hey, we have an appraisal waiver. Send that to the seller. Let's offer a short close. Boom. Then you don't need an appraisal contingency as long as the buyer is okay with it. Easy, no-brainer deal. So I really like that about conventionals. Like I said, there's no added cost to the loan for doing a conventional. They're just the most versatile, man. I really like a conventional loan. It allows you to do so much more than just an FHA, VA, or like a USDA. Typical closing times on them are, anywhere from 20 to 30 days. A lot of lenders do offer them. I think it's the most common loan type out there. And that's no surprise, right? And the majority of the deals that I do are conventional. I like them. I like the no fluff. There's no weird guidelines to it. On FHA, VA, USDA, there are some aspects that are better for the buyer, meaning the house, it has to be in really prime condition. It has to be move-in ready, let's say. But that's going to prevent, some sellers from accepting your offer. I've had that too, where you'll go online and you'll see the houses for sale, this and that, and it says conventional or cash only. No FHA, no VA. Now, there might be a reason why, but, in a lot of cases, a conventional is just easier to get done. There's less hoops to jump through. The homeowner's insurance requirements are not quite as stringent. So if there's ever a chance that you qualify for both, conventional is definitely the better way to go. And there's another thing too I should mention. So part of the attractiveness of an FHA is it has a lower rate usually than a conventional, anywhere from 1/4 to 0.5 point% better. So the payment's a little lower, but not really. Because in most cases, the mortgage insurance on an FHA loan is higher than a conventional loan. So I always run them side by side, right? If you're shopping around, I'm gonna show you, hey, these are the differences between the two. This is my recommendation. You do what you want, but I'm gonna do the math for you so I can help you make the most efficient and cost-effective decision possible. So that's why I like conventionals. I'm happy to do any type of loan that you would rather do. No problem. Tons of options out there. But like I mentioned too, if you have a specific goal in mind, be it a second home or an investment property or something, or a condo, there are some ways to do a condo with an FHA or VA, but they're pretty tough. But if that's your goal, conventional is the way to go. I'm your guy. Happy to help you. Thanks for watching, and we'll see you next time.